You came here for the truth. Today we are going to talk about Japan as it is today. We're going to look at Japan years ago. And the third thing I want to discuss is the global parallels so that you can be prepared. Let's go. So I want to show you exactly what's going on right now today in Japan. A lot of people, I know you've heard it, they say Japan is the model of success. They have continued with quantitative easing for decades. And look, no inflation. They're doing just fine. But I will show you why that is not the case. You are going to get the full download right here, right now. This comes from Yardeni, and you could see they put together this package of the central banks and what they've been up to. We'll have our focus on the Bank of Japan. The BOJ is the green line. One of the things I wanted to note right off the bat was that you can actually see their balance sheet declining. Can you believe that? It's not exactly a normal thing today, but it is declining. Now we're coming off a peak, obviously, but this is just something a little bit different. We're going to move down. You could see the total assets of all central banks obviously going crazy, but let's look a little deeper. And when you see the total assets of major central banks as a percentage of the GDP, the BOJ is far greater than any of the others. Okay, we're comparing to the Fed, the PBOC, the ECB. That green line right there, the BOJ at about 130%. So when you compare it to the economy of that particular country, Japan is head over heels, into this. I mean, they have just gone into a territory that no other central bank has. There are more details in here if you want to see. You can split that up by the different central bank. But I just want to make it clear once again that we are coming off of that peak. Now, if you look at previous instances where we saw the same pattern as in 2016 into 2017, it did go much, much higher after. So it doesn't necessarily mean that a little pullback is going to mean that big difference long term. This was from June 29th, 2021, and it goes in line with that. The BOJ to trim JGB buying. We're talking about government bonds of Japan, taking a hands-off approach. I would disagree with that, but anyway. So what has happened here is that the central bank has been buying the maximum amount of everything, including the government bonds, just like you would have in other countries, maybe like the United States, where the Federal Reserve is buying up the treasuries. They're doing the same thing in Japan, but to an even greater degree. First since 2012, the Bank of Japan went a month without buying ETFs. And this was previously actually, but I just want to show you that they're buying ETFs. They're buying government bonds. They're basically doing everything. And this article points it all out and summarizes it for us. What happens when the Bank of Japan owns everything? Now, this is a 5-year-old article, but they saw the writing on the wall at Forbes, knowing that if the central bank comes in, then of course you're going to have an issue when they become the only buyer, not the buyer of last resort, but the only buyer. And they mentioned something right here, and that is essentially that the second biggest buyer is the government's own pension fund. So that's the second biggest. The primary now becoming the BOJ. Where are all the real investors? Well, you could argue the pension fund, real investor, but look, let's be honest of what's happening here. Now, this is the total assets for Japan today, right now. You could see over these years what has happened. Continuous and never-ending expansion of the balance sheet. But what had happened to the residential property prices? You could see this peak right here. That is in approximately, if I look at here, maybe 91 or so, 1991. That the index hit, I would say, about 182 or so. Today that sits at 118, give or take. It is not even close to where it was at the peak. Not even close. They printed money. They expanded their balance sheets. They used debt and deficits. They went all out to create this bubble. And it popped and hurt a lot of people along the way. And some of these people who bought into this bubble have yet to see their returns. Basically, I mean, think about that. 30 years later, 3 decades later, we're still not back to where we were. That's property prices, and I'm sure you can go to certain areas in certain buildings where you have, prestigious or sought-after neighborhoods, and you're going to find record high prices. But we're talking about generalizations here. Okay? And of course, you have to, come to that conclusion that there's always going to be differences. There's always going to be variables. But we have to understand the basic concept. Look at the Japanese stock market index. It has gone up considerably since this 2012 timeframe. All right? It has risen here, as you can see, somewhere around 28,000. By the time you're watching this video, perhaps it's higher or lower. But look at where it was. At this time, unbelievably, hard to see on the chart here, but maybe 37,000? 37,000, today sitting at more like 28,000. We still have yet to get to these levels. The governments, the investors rushed in to this bubble. And look, there were times in which it declined. If you can see that, font's pretty small, or the graphic's pretty small. But this declined a fairly significant amount and still rocketed much, much higher. Now, how many people do you think got in anywhere near the top or got out anywhere near the top? Very few. Very few skilled people. And maybe they got out and then they bought in again because they said, this is a dip. I'm going to buy in. Even if you consider that peak there was an anomaly, it still rocketed so much higher than what anybody should think to themselves is normal, and yet they kept buying and buying and buying. And now today, the Bank of Japan becomes the biggest Japan stock owner with $434 billion hoard. This was back in 2020. But anyway, things have gotten worse ever since that time anyway. It is showing you that the central bank is willing to do anything to consume. They will consume anything and everything. And of course, they are doing that today with the ECB, with the BOJ, with the Federal Reserve, and all of the other central banks engaging in the same activity. Number 1, Japan printed as much money as possible to prevent a crisis. Number 2, decades later, 3 decades later, we are still dealing with the same issues. Number 3, the US is heading down the same path, so expect the same results. Take a look at what's been happening in the United States right now. The more money they print, the more they exacerbate the wealth gap, inequality, making things worse for the individual. Watch as the middle class goes bye-bye. You see what happens to the country. Inflation-adjusted household net worth by brackets, I think it's pretty obvious, but those at the top, they're showing you here as the orange. That's the top 1%, obviously, and they've done better and better and better. And it's probably almost impossible to see on your screen, but right at the very bottom, there's a little bit of blue, and that is the bottom 50%. Okay? Total system leverage In this period right here, government, corporate, household, margin, banks, student loans have gone off the charts. The GDP has not done well. Not done well at all. And this just shows you the real economy compared to the level of leverage or debt. Debt is the new system which they are using, but debt does not create real wealth. It helps out those at the top and not those, basically everybody else. As you can see, the breakdown of current equity ownership. Take a look at the 1%, the top 1%, 51% of that total, and the 90 to the 99th, 34%. So the vast majority of the pie is owned by that top 1% or top 10%. And you get that sliver right in here, if you could see it, for the bottom 50%. And all of this is done specifically by the central bank. Markets disconnected from the economy, same sort of situation. You could see the orange line, which is the cumulative S&P 500 growth, and that's 200% since 2007, compared with the real GDP growth, that purple line, 23%. I think it is pretty clear what's going on. And the more that they do these actions, the worse things will get. So whenever I see people talking about Japan is the model of success, point them to this video, understand what happened with the real estate market, with the stock market, and where that has led them, where there are virtually no real investors left. If you appreciated this video, you got to help me out here. Join the insiders, because that's where I'm going to be able to connect with you directly. This is my way of getting to you, getting around the censorship, getting around all the nonsense that I've got to deal with. It is totally free. It's available here at this card, or you can get it at themoneygps.com. Don't forget to hit that like button. By hitting the like button, you are supporting this channel. If you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.